Okay, and the one other feature of the Australian economy is the very historically low unemployment rate. It's out tomorrow. It's likely to be 4.1%. That's the forecast from the markets. And this also shows again that, there's going to be strong revenues going into the government's coffers as a result of that. So that also plays into this narrative of where wages grows into the future, because there's still demand for labour out there.
That's right. The labour market has remained very tight. In fact, if we think about the last 8 to 9 months, the unemployment rate has kept between 3.9 and 4.1%. And it's only moved up from the trough in late 2022 of 3.4%. So it's barely budge from that trough over the last 2 years. So the labour market does remain tight, and on most indications it's suggesting that it will continue to be tight, although there are some early signs that potentially employment growth is easing. Now, you're seeing wages growth, I guess, ease from the peak amid this very tight labour market. So again, that should help the Reserve Bank cut rates next week, but against a backdrop of a tight labour market, we're unlikely to see very aggressive rate cutting, leaving aside what's happening with the global economy. If we put that aside for the moment.
Indeed. I'll tell you what, always good to have in the program, Besa with the advisory and accounting business, William Buck.